in the book and as well as in my newsletter, I cover everything from physical silver to junior explorers, which are the opposite ends of the spectrum in terms of risk. So physical silver is going to be your lowest risk option to invest in silver. That means buying things like coins that are produced by a national mint. Could be the Royal Mint, could be the US Mint, could be the Australian Perth Mint. So that's physical silver. And then from there, if we go through the different levels of risk, you've got things that are like silver ETFs. There are two kinds of silver ETFs. One will essentially track the price of silver. It's a way to buy a proxy on silver. You're not actually owning any physical silver, so I would not equate it to physical silver. I'm a proponent of owning at least a little bit of physical silver, but silver ETFs, as I say, they're a way to play the price or the movements in silver. It's a one-click way to buy a stock and have exposure to silver. The ETFs are backed, or supposed to be, at least in most cases, backed by physical silver. From there, you've got another kind of silver ETF, which is a one-click way to own a basket of silver stocks. And there are two. There are two mainly. One is the SIL ETF, and that owns a larger size silver companies. And then there's the Silver Junior ETF, which is actually a bit of a misnomer. It's more like mid-sized to larger silver companies. Again, these two are lower risk ways because you're buying a single stock, so to speak, and that's diversified across a number of silver companies. From there, you've got individual silver miners or royalty companies. So the royalty and streaming companies are the lowest risk in that category. You've got companies which do not actually mine silver, but they invest in silver miners or silver projects. So they will lend money to them, and they're paid back over sometimes decades, either in kind, in silver, or in terms of profits for every ounce of silver that the miner produces. So that's a very attractive way to invest in the space. Then you've got large silver producers, which is self-evident, companies that produce silver and often some other metals. You've got growing silver companies that either will produce some silver but have a larger portion of the company's focus on developing new projects in silver. Then you've got essentially the juniors, and the juniors most of the time either have a project that or a deposit that they've discovered, a silver project, or they're actually just exploring, have not discovered any silver, but have done plenty of research. They may be looking in an area where there has been some previously, and they're looking for an economic deposit. And those will be the highest risk ones. So yeah, there are these multiple ways to invest in the space.
Thank you so much for listening, and if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.